Before we begin, please remember that this presentation is for informational and educational purposes only. I am not a licensed financial advisor or insurance agent. The information provided in this video is not a substitute for professional advice tailored to your specific situation, as rates, policies, and company performance can vary significantly based on your location and personal details. Always conduct your own research and consult with a qualified professional before making any financial decisions. You know that feeling? That envelope or email arrives, and your stomach sinks just a little. It's your car insurance bill. And for the third time in a row, with no accidents, no tickets, no changes on your end, the price has gone up. You ask yourself, what did I do to deserve this? And the answer is, absolutely nothing. You've been a loyal customer. You've paid on time every time. And your reward? A penalty. A secret tax for your loyalty. What if I told you that the average American driver overpays for their car insurance by over $800 a year? $800. That's a new set of premium tires. That's a weekend getaway you're just handing over to a massive corporation for no good reason. You feel stuck because shopping for insurance is a nightmare. It's confusing, it's time-consuming, and all the companies seem to be the same. That feeling of being trapped is not an accident. It's a strategy. But today that ends. Today we pull back the curtain on the entire U.S. auto insurance industry. We are going to expose the tactics, demystify the jargon, and most importantly, give you a definitive data-driven ranking of the top auto insurance companies in America for this year. By the end of this video, you will not only know which company is statistically the best, but you'll understand why. You will have a clear roadmap to potentially save hundreds, if not thousands of dollars a year while getting better coverage from a company that will actually have your back when you need them most. We're not just looking at price. Anyone can give you a cheap quote. We are diving deep into the 4 critical pillars of a great insurance company. First, customer service. Who actually picks up the phone and treats you like a human being? Second, claims handling. When the worst happens, will they pay you quickly and fairly? Or will they drag you through an administrative hellscape? Third, price and discounts. Who offers the most competitive rates and rewards for good drivers, students, or bundling policies? And fourth, digital experience. How easy is it to manage your policy, file a claim, or get help through their app and website? The reason this is so difficult is because the industry is designed to be opaque. They bombard you with commercials featuring talking lizards, goofy mascots, and catchy jingles, all to distract you from the one thing that matters: value. They bank on the fact that you're too busy to spend a weekend comparison shopping. They rely on something called price optimization. That's a fancy term for a sinister practice where they analyze your data to figure out the maximum amount they can raise your premium before you'll actually go through the hassle of switching. It has nothing to do with your driving record and everything to do with their profit margin. They are betting against you. They are betting that your loyalty means you'll just sigh, accept the rate hike, and pay the bill. We're here to help you call their bluff. So how did we build this ranking? This isn't based on my opinion or a few online reviews. We synthesize data from the most respected, unbiased sources in the country. We're talking J.D. Power's comprehensive annual auto insurance studies, which survey tens of thousands of real customers about their satisfaction with claims and service. We're looking at complaint data filed with the National Association of Insurance Commissioners, which tells you exactly how many customers had a problem so bad they had to file a formal grievance. We're analyzing financial strength ratings from AM Best, which tells you if a company actually has the cash on hand to pay out a massive number of claims after a major catastrophe. And we've scoured consumer reports and user reviews to get the real-world story behind the marketing slogans. We've done the weeks of research so you don't have to. And I promise you the results will surprise you. Some of the companies you see advertised on every single commercial break are shockingly low on this list when it comes to actually taking care of their customers. And the company that takes the #1 spot? It might be one you've never even considered. So stick with me because we're about to go through this list one by one, starting from the bottom and working our way to the absolute best. We'll break down the good, the bad, and the ugly for each major player in the market. Let's start with a company that is an absolute giant in the industry, a name everyone knows: Progressive. With their relentless advertising featuring Flow, you can't escape them. They write over $60 billion in premiums a year. But does being big mean they're good? Well, it's complicated. Progressive is, in many ways, the king of convenience and technology. Their online quoting tool is fast, their mobile app is slick, and they were one of the pioneers of telematics with their Snapshot program. This is the little device or app that tracks your driving habits. how hard you brake, how often you drive late at night, how many miles you drive, to supposedly give you a personalized discount. For some drivers, particularly safe, low-mileage ones, this can lead to significant savings. It's a powerful tool if you're a great driver and you're willing to trade some of your privacy for a lower rate. This focus on technology is their biggest strength. Filing a claim through their app is often a smooth process, with features that let you upload photos of the damage and track the status of your repair in real time. For a simple fender bender, it can be remarkably efficient. They also offer a huge array of discounts: multi-policy, multi-car, good student, paperless billing, paying in full, you name it, they probably have it. Their Name Your Price tool is a clever marketing gimmick that essentially lets you see what level of coverage you can get for a specific budget, which can be helpful for those who are extremely price-sensitive. However, here's where the cracks begin to show. When you look at the customer satisfaction data from J.D. Power, Progressive consistently ranks just average, right in the middle of the pack. Not terrible, but certainly not great. For every person who loves the convenience of their app, there's another person who tells a horror story about trying to get a real human on the phone to resolve a complex issue. Their claim satisfaction scores are particularly telling. While simple claims might be easy, more complicated ones, involving injuries, total losses, or disputes over who was at fault, can become a real battle. The complaint index from the NAIC often shows Progressive with a higher than average number of complaints relative to their size. The common theme? Lowball settlement offers, delays in payment, and difficulty getting straight answers from adjusters. It seems their model is optimized for high-volume, low-touch interactions. When your situation requires a human touch and a bit of empathy, the experience can fall apart. So, the verdict on Progressive? It's a solid choice for the tech-savvy, self-sufficient driver with a clean record who is primarily focused on finding a competitive price and is comfortable managing their policy almost entirely online. But if you value top-tier customer service and want the peace of mind that comes from knowing your insurer will go to bat for you in a complex claim, you might find Progressive to be a frustrating and impersonal experience. They are a tech company that sells insurance, and sometimes that feels exactly backward. But what if you want the exact opposite? What if you crave that human connection, that local agent who knows your name, knows your street, and can sit down with you face-to-face to explain the mind-numbing jargon of your policy? Well, then you're probably thinking you should be in good hands. Let's talk about Allstate, the legacy giant trying to prove that the old ways are still the best ways. On the surface, Allstate's value proposition is incredibly compelling. They are the antithesis of the faceless, algorithm-driven model. Their entire brand is built on the promise of a personal relationship. You're not just buying a policy, you're buying a local advocate. And for many people, that's worth a lot. Having a dedicated person to call when things go wrong, someone who can guide you through the chaos of an accident, is a powerful security blanket. Their agents are often deeply embedded in their communities, sponsoring local Little League teams and running their offices on Main Street. Feels tangible, feels real. Allstate also boasts an impressive array of coverage options. They go far beyond the basics. You can get new car replacement, which is a huge deal if your brand new vehicle gets totaled. They offer robust accident forgiveness, so one mistake doesn't send your rates into the stratosphere. And their DriveWise program, their telematics offering, is one of the more established in the industry, potentially rewarding safe drivers with significant discounts. If you want to customize a policy with all the bells and whistles, Allstate has a bell and a whistle for just about everything. Plus, their financial strength is rock solid. This is a centenarian company. They have weathered depressions, wars, and countless natural disasters. You can be confident that when it comes time to pay a massive claim, the money will be there. But you knew there was a but coming. That personal local agent model comes at a cost. A very literal one. Allstate is consistently one of the most expensive major insurance carriers in the country. That beautiful Main Street office, the salary for your local agent, the massive advertising budget featuring charismatic actors in chaotic situations, you are paying for all of it. In many head-to-head comparisons, Allstate's premiums can be hundreds, sometimes even thousands of dollars more per year than their leaner, direct-to-consumer competitors for the exact same coverage. And the quality of that cornerstone, the local agent, can be a total roll of the dice. A great Allstate agent can make the high price feel worth it. They'll be your champion, fighting for you, proactively reviewing your policy, and making a stressful claims process feel manageable. But a bad agent? A bad agent can make it the worst of all worlds. You're paying a premium price for someone who doesn't return your calls, gives you bad advice, or is more focused on upselling you than servicing your existing policy. Since the agents are independent business owners, the experience is wildly inconsistent from one office to the next. Worst of all is the disconnect between their marketing and the reality of their claims process. For a company that promises you're in good hands, their reputation for claims satisfaction is surprisingly mediocre. J.D. Power studies often place them right in the middle of the pack, or even slightly below average. Dig into online forums and you'll find a recurring theme. Allstate is great, until you have to file a claim. Stories abound of initial settlement offers coming in shockingly low, of adjusters being difficult to reach, and of a process that feels more adversarial than supportive. It seems that once your claim leaves the local agent's desk and enters the massive corporate machine, that personal touch can vanish in an instant. So who is Allstate for? Allstate is for the person who deeply values a local, human connection and is willing to pay a significant premium for it. If you're the type of person who wants to walk into an office, shake a hand, and have a consistent point of contact for the life of your policy, Allstate is built for you. But you have to do your homework. You must vet your specific local agent as if you were hiring them for a job. And you have to go in with the understanding that if a major claim occurs, those good hands might start to feel like they're holding on to their money very, very tightly. So with Allstate, you're paying for a person, a handshake, a relationship. But what if you'd rather save that money and just talk to a gecko? For millions of Americans, the answer is Geico. 15 minutes could save you 15% or more. But what could it cost you in the long run? Geico is a titan of the industry, a master of marketing, and the undisputed king of the direct-to-consumer model. They stripped away the expensive overhead of local offices and armies of agents and poured those savings directly into two things: lower prices and a seemingly infinite advertising budget. You can't watch TV for an hour without seeing their charming gecko, the overexcited caveman, or some other quirky character. Their message is relentlessly simple and effective. We are cheaper. And for a huge number of people, that message is absolutely true. Geico's biggest, most undeniable pro is its price. They are fiercely competitive and often come in as the lowest or one of the lowest quotes, especially for drivers with clean records in standard risk categories. That 15% or more isn't just a slogan. For many, it's a reality that translates into hundreds of dollars in annual savings. This single factor makes them the default choice for a massive segment of the population. Their second major strength is their technology. Geico's website and mobile app are phenomenal. They are intuitive, fast, and incredibly comprehensive. You can get a quote, purchase a policy, print your insurance cards, make a payment, and even start the entire claims process, including uploading photos of the damage, all from your phone, without ever needing to speak to a human being. For the self-sufficient, tech-savvy consumer who hates talking on the phone, the Geico experience is a dream. It is efficient, streamlined, and puts you in complete control. And just like Allstate, you don't have to worry about their ability to pay. Geico is a subsidiary of Berkshire Hathaway, Warren Buffett's legendary holding company. This means they are backed by one of the most financially stable and well-managed corporate entities on the planet. Their financial strength rating is consistently at the top of the charts. Your money and your claim are as safe as they can possibly be. So what's the catch? The catch is the flip side of their greatest strength. In stripping away the agents, they also stripped away the personal service. With Geico, you are a policy number in a colossal system. When you call, you're not talking to your guy, you're talking to a guy or a woman in a massive call center who is working through a queue of hundreds of other calls. There's no relationship, no local knowledge, no continuity. The person who helps you with a billing question today will be a different person than the one who handles your claim tomorrow. For simple transactions, this is perfectly fine. But when you're standing on the side of a highway after a serious accident, feeling scared and confused, a faceless call center can feel cold and inadequate. This impersonal nature extends directly to their claims process. Much like Progressive, Geico is a volume business. Their goal is to process claims as quickly and efficiently, which often means as cheaply as possible. While their initial claims filing process is easy thanks to their app, the actual negotiation and settlement can be a very different story. Customer satisfaction ratings for Geico's claims handling are a mixed bag. Many report a smooth, fast process for simple claims. But for more complex accidents involving injuries or liability disputes, a common complaint is that the company becomes difficult, makes lowball offers, and requires constant follow-up to get a fair resolution. You have to be prepared to be your own advocate. And finally, while their initial rates are low, they can be sensitive. That fantastic premium you locked in can spike dramatically after just one at-fault accident or a couple of speeding tickets. Their business model is built on ensuring good drivers at a low cost, and when a driver's risk profile changes, their pricing model can adjust, and not in your favor. Ultimately, Geico is for the price shopper. It's for the driver who is confident, self-sufficient, and whose primary goal is to secure reliable coverage for the lowest possible cost. If you are comfortable managing everything digitally and understand that you're trading personalized service for significant savings, Geico is one of the best choices you can make. It's a fantastic deal. Until it isn't. And you often won't know which it is until you're in a situation where you need them most. The savings are real, but so is the risk of navigating a complex claim on your own. That moment, the one where you're standing on the side of the road, heart pounding, looking at the twisted metal that used to be your car, that's the moment of truth. That's when your insurance policy transforms from a piece of paper or a number on a screen into a lifeline. It's when the monthly premium you've been paying suddenly becomes the most important investment you've ever made. And the quality of that investment is measured by one thing: how the company responds when you're at your most vulnerable. This is precisely why our rankings aren't just a simple list of the cheapest options. Price is a factor, of course, but it's just one piece of a much larger puzzle. We've dug deep into the data, analyzing thousands of customer reviews, official complaint records from the National Association of Insurance Commissioners, and the highly respected J.D. Power studies on claim satisfaction, customer service, and digital experience. We're looking for the complete package, because a cheap policy that abandons you when you need it most isn't a bargain. It's a liability. So, with that crucial framework in mind, let's dive into the rankings, starting at the bottom of our top 10. Coming in at number 10 is a company known for its aggressive marketing and its focus on a specific segment of the market: the General. You've seen the commercials. The animated General, the catchy jingle. Their core promise is simple: we'll insure you, even if others won't. They specialize in providing coverage for high-risk drivers, those with a history of accidents, tickets, or a lapse in coverage. For this group, the General can be a lifeline, offering a path to legal driving when mainstream insurers have shut the door. They are incredibly accessible, and their process for getting a basic policy is fast and straightforward. This is their undeniable strength. If your driving record is less than perfect and you just need to get back on the road legally, the General is an option on the table. However, their position at number 10 on our list reflects significant challenges in other areas. The primary concern, echoed across numerous consumer reporting platforms, is customer service and claims handling. The business model appears to be built around volume and automation for a high-risk pool, which often doesn't translate into a supportive, high-touch customer experience. When a claim is filed, customers frequently report a frustrating, slow, and opaque process. Communication can be difficult, with long hold times and a sense of being passed from one department to another without clear answers. While they will pay out on legitimate claims, the journey to get that payout can be an ordeal. The premiums, while accessible for high-risk drivers, are often not competitive for those with good or even average driving records. So the verdict on the General is clear. It serves a vital purpose for a specific niche of drivers. But for the average consumer looking for a balance of price, service, and reliability, the data suggests there are much stronger choices available, which is why it sits at the start of our countdown. Moving up one spot to number 9, we have a household name and an absolute giant in the industry: Progressive. It's impossible to turn on a TV without seeing Flo or one of their other memorable ad campaigns. Progressive has built its brand on innovation, technology, and giving customers choices. They were one of the first to offer direct-to-consumer sales online and comparison rates with their competitors, a move that fundamentally changed the industry. Their Name Your Price tool is a brilliant marketing concept that empowers customers, and their telematics program, Snapshot, was a pioneer in usage-based insurance. If you are a safe driver and are comfortable with your driving habits being monitored, Snapshot can offer you some genuinely significant discounts. Their digital tools, from the mobile app to the website, are generally slick, modern, and user-friendly. You can manage your policy, file a claim, and get assistance with relative ease. So why isn't Progressive higher on our list? Comes down to consistency. While their tech is top-notch, the human side of the experience can be a mixed bag. J.D. Power scores for Progressive tend to hover right around the industry average, sometimes slightly below, especially in claim satisfaction. For every customer who has a smooth, app-driven claims experience, There's another who describes a bureaucratic, impersonal process when things get complicated. The initial claims intake is often efficient, but the follow-through, especially when dealing with adjusters and settlement offers, can be a point of friction. Some customers report feeling like a number in a massive system, and initial settlement offers, particularly for bodily injury claims, can sometimes be on the low side, requiring negotiation and persistence. Furthermore, while Snapshot can save you money, it can also raise your rates. Heartbreaking late-night driving, or even just the routes you take can negatively impact your score and your premium, which isn't always made crystal clear up front. Progressive is a solid, tech-forward choice for many, but its massive scale can sometimes lead to an inconsistent and impersonal experience when you need that human touch the most. Climbing to the number 8 position, we find another one of the titans, Allstate. Their slogan, "You're in good hands," is one of the most iconic in American advertising. And for many customers, that slogan holds true. Allstate's greatest strength is its vast network of local agents. Unlike the direct-to-consumer model of a company like Geico or the call center focus of Progressive, Allstate offers a hybrid approach. You can buy a policy online, but you are also assigned a local agent. For people who value having a personal relationship, a specific person to call, an office to walk into, this is a massive advantage. A good Allstate agent can be your advocate, helping you navigate policy options, find discounts, and guide you through the claims process. This personal connection can be invaluable, turning a stressful situation into a manageable one. Allstate also offers a robust suite of products, making it easy to bundle home, auto, and life insurance for significant discounts. Their tech is strong too, with a highly rated mobile app and the DriveWise telematics program, which, like Progressive Snapshot, rewards safe driving. The reason Allstate lands at number 8 is twofold: price and consistency. Allstate is frequently one of the more expensive options on the market. That good hands service and the overhead of maintaining thousands of local agent offices comes at a cost, which is passed on to the consumer. For many drivers, a quote from Allstate will be noticeably higher than one from its top competitors. If you don't place a high value on having a dedicated local agent, it can be hard to justify the extra premium. The second issue is that the quality of your experience is heavily dependent on the quality of your specific agent. A fantastic proactive agent can make Allstate feel like the best company in the world. An unresponsive or inexperienced agent, however, can leave you feeling stranded, negating the primary benefit of their business model. While their overall claim satisfaction scores are generally respectable, they aren't consistently at the top of the industry. Customers sometimes report a disconnect between their local agent's promises and the decisions made by the corporate claims department. Allstate represents a premium choice for those who want personalized, local service, but its higher cost and variable agent quality keep it from breaking into the upper echelon of our list. We've just covered the first 3 companies in our countdown, and a clear theme is emerging: a battle between technology, price, accessibility, and the classic human touch. Each company has carved out a niche, but each comes with significant trade-offs. But as we prepare to move into our number 7 spot and beyond, the competition gets fiercer. We're about to enter the territory of companies that are trying to do it all: blend competitive pricing with stellar service and cutting-edge tech. This is where the truly great companies begin to separate themselves from the merely good. And kicking off this next tier, sliding into our number 7 spot, is a company that practically lives and breathes that mantra of blending tech and tradition: Progressive. Now, you can't talk about car insurance in the modern era without talking about Progressive. For decades, they've positioned themselves not just as an insurance provider, but as a tech company that happens to sell insurance. They were one of the first to sell directly to consumers online, cutting out the middleman and, in theory, passing those savings on to you. They pioneered the price comparison tool, boldly showing you their competitors' rates right next to their own. That level of confidence is, well, it's a heck of a marketing strategy. But their biggest, most disruptive innovation, the one that changed the game, is Snapshot. This is the heart of the Progressive philosophy. The idea is simple, almost elegant. Your insurance rate shouldn't be based on demographics and averages. It shouldn't be based on what people like you do. It should be based on what you do, how you actually drive. So they give you a little plug-in device, or you use their mobile app, and it tracks your driving habits. Hard braking, rapid acceleration, late-night driving, total mileage. The better you drive, the bigger your discount. It's the ultimate promise of a personalized rate. For safe, predictable drivers who have a regular commute and don't spend a lot of time on the road after midnight, Snapshot can feel like a godsend. We've seen reports of people saving hundreds of dollars a year, feeling like they've finally been rewarded for being responsible behind the wheel. It puts the power quite literally in the driver's hands. Their app is slick, their website is easy to navigate, and filing a claim can often be done entirely from your phone, complete with photo uploads and status trackers. For the self-sufficient, tech-savvy individual who wants to manage everything on their own time without ever having to speak to a human being, Progressive has built a near-perfect ecosystem. They've poured billions into creating a streamlined, digital-first experience. But, and this is a massive but, there is a dark side to all that data. The very tool designed to save you money, Snapshot, can also be the thing that raises your rates. See, it's not just a discount tool. It's a surveillance tool. Have a few bad days on the road? A week where you have to brake hard in traffic more than usual? Does your job require you to be on the road at what they deem high-risk hours? Suddenly, that personalized rate can work against you. And the problem is, the algorithm is a black box. You don't know exactly how much one hard break or one late-night trip to the pharmacy is costing you. This lack of transparency is a major source of frustration for many customers. They feel like they're being judged by a machine that doesn't understand context. That hard break might have been to avoid hitting a deer. That late-night drive might have been a family emergency. The algorithm doesn't care, just sees a data point, and this bleeds into their customer service. While their digital tools are top-notch, when you actually need to talk to a person, particularly for a complex claim, the experience can be inconsistent. Because the company is built on a model of digital efficiency, the human element can sometimes feel like an afterthought. You might be talking to a call center representative who is 1,000 miles away, working off a script, and who doesn't have the authority to make real decisions on your claim. So, Progressive is a paradox. It's a fantastic choice for the confident, safe driver who loves technology and self-service, and who is willing to bet on their own driving habits. But for those who value privacy, who have an unpredictable schedule, or who want a human touch when things go wrong, the Progressive model can feel cold, invasive, and unforgiving. It's the epitome of a high-tech, data-driven giant, and it lands solidly at number 7. So if Progressive is the tech-obsessed innovator, what's the alternative? What if you hear all that and think, I don't want my car spying on me. I just want someone I can trust. Well, that brings us to our number 6 company, which is built on a fundamentally opposite philosophy. Stepping into the ring is State Farm, and their slogan isn't just a catchy jingle. It's their entire business model. Like a good neighbor, State Farm is there. This isn't a company built around algorithms and apps. It's built around people. Specifically, a massive network of over 19,000 local agents scattered in neighborhoods all across America. When you buy a policy from State Farm, you're not just buying a piece of paper. You're often buying into a relationship with a local small business owner. Your agent is the person you see at the grocery store, whose kids go to the same school as yours, who sponsors the local Little League team. This is an incredibly powerful emotional anchor. When you have an accident, you're not calling a 1-800 number and hoping for the best. You're calling your agent, a person whose name you know and who knows you. They can walk you through the process, advocate on your behalf with the claims department, and provide a level of personal guidance that a faceless call center simply cannot match. For people who are intimidated by the insurance process, who have complex needs like bundling home, auto, and life insurance, or who simply value human connection, the State Farm agent model is the gold standard. This focus on service consistently earns them high marks in customer satisfaction surveys, especially when it comes to the claims process. J.D. Power frequently ranks them at or near the top for overall customer satisfaction. People feel taken care of. Their agents are often praised for being proactive, for reaching out to review policies, and for finding discounts you might not have known existed. It's a hands-on, high-touch approach that feels reassuring in an increasingly automated world. They offer a huge range of products beyond just auto insurance, making them a true one-stop shop for many families' financial needs, from banking to retirement planning. But that personal touch comes at a price. Literally, maintaining a network of thousands of physical offices and dedicated agents creates immense overhead. And that cost is inevitably passed on to the consumer. State Farm is very rarely the cheapest option. In many of our quote comparisons, they were significantly more expensive than more digitally focused companies like Progressive or Geico. You are paying a premium for that good neighbor service. And while their agents are a huge asset, they can also be a variable. Your experience with State Farm is almost entirely dependent on the quality of your specific agent. A great agent can make it the best insurance experience of your life. An unresponsive or inexperienced agent can make it a nightmare, leaving you feeling like you're paying more for nothing. Furthermore, while they've been working to improve, their technology often lags behind the competition. Their app and website are functional, but they can feel clunky and less intuitive than the slick interfaces of their tech-first rivals. For someone who prefers to handle everything online quickly and efficiently, dealing with State Farm can sometimes feel like a step back in time, requiring phone calls and paperwork for things that could be done with a few taps on another company's app. So, State Farm sits at number 6 because they are one of the absolute best when it comes to customer service and having a trusted advisor on your side. But you have to be willing to pay for it, and you have to be okay with a slightly less modern technological experience. So look at where we are. We have the data-driven, low-cost potential tech giant in Progressive at number 7. And we have the people-first, service-oriented, but more expensive legacy provider in State Farm at number 6. Two completely different approaches, each with passionate advocates and equally passionate detractors. It's the classic battle of machine versus man, efficiency versus empathy. But what if a company tried to do both? What if they tried to build a powerful, user-friendly tech platform while also maintaining a reputation for stellar, human-centric customer service? The company that's coming up next in our number 5 spot has poured billions into exactly that goal. They are trying to be the perfect hybrid, the best of both worlds. And the result of that experiment is one of the most fascinating, and for some drivers, one of the most rewarding companies on the entire list. That company is Progressive, and their story isn't about being a flashy startup. It's about an 85-year-old giant learning to think, move, and innovate like one. Founded back in 1937, their name wasn't just a name, it was a mission statement. While other insurers were cherry-picking the safest, most predictable drivers, Progressive's founders Joseph Lewis and Jack Green aimed for the exact opposite. They built their business by insuring the drivers everyone else rejected. They were, from day one, progressive. This DNA, this willingness to zig when everyone else zags, is the key to understanding them today. They were the first insurance company to offer drive-in claims service. Think about how revolutionary that was. Instead of waiting for an adjuster to come to you, you went to them, dramatically speeding up the process. They were the first to let customers pay their premiums in installments, a move that opened up access to insurance for millions of working-class Americans. They launched a website in 1995, an eternity ago in internet years. And by 1997, they became the first company in the world to let you buy a car insurance policy entirely online. This wasn't a company that suddenly discovered technology in the 2010s. They've been living and breathing it for decades. So when they decided to build the ultimate hybrid model, they had a massive head start. Let's break down how they did it. On one side, you have the technology. This is their inner Geico, their digital-first brain. The crown jewel of this operation is, of course, Snapshot. For years, insurance was based on proxies. Companies looked at your age, your zip code, your credit score, and your driving record to guess how risky you were. Progressive, with Snapshot, decided to stop guessing. They created a system that said, forget the proxies. Show us. Prove you're a good driver, and we will reward you for it. It started as a physical device you plugged into your car's OBD2 port, but now it's mostly a seamless app on your phone. It monitors your actual driving behavior, how often you hard brake, how many miles you drive, what times of day you're on the road, and whether you're using your phone. This is a game changer. It puts the power directly into the driver's hands. If you are a genuinely safe, low-mileage driver who avoids late-night trips, your rate could plummet. You are no longer being judged by the statistics of your demographic. You are being judged on your own merit. It's the ultimate meritocracy for the open road. This tech-forward approach infuses their entire customer experience. Their website and app are consistently ranked among the best in the industry. You can get a quote, buy a policy, file a claim, and even upload photos of damage, often without ever needing to speak to a human being. They pioneered the Name Your Price tool, which flips the quoting process on its head. Instead of them telling you a price, you tell them what you want to pay, and they show you a menu of coverage options that fit your budget. It's a brilliant piece of marketing psychology that again reinforces this feeling of customer control. But here is where Progressive executes its brilliant pivot. Just when you think they're a faceless tech company, they reveal the other half of their identity, the human touch, the State Farm side of their brain. Progressive has a sprawling network of over 38,000 independent agents across the country. So if Snapshot feels too invasive or if you have a complex situation, Maybe you own a small business, have a classic car, or just prefer to look someone in the eye. You can walk into a local office and have a conversation with a licensed professional who can guide you through the process. You get the efficiency of a tech giant with the option of small-town, personalized service. And this commitment to the real world goes even further, especially when things go wrong. This is where we see Progressive's true secret weapon: their network of service centers. If you get into a major accident, the traditional process is a nightmare. You call your insurer, wait for an adjuster, get a quote, find a body shop you trust, argue with them about the repair costs, arrange a rental car, and then wait, hoping the work gets done right. Progressive's solution is to take over the entire process. You drop your damaged car off at one of their centers. They immediately give you a rental car on the spot. Then they manage the entire repair process from start to finish, guaranteeing the work for as long as you own the car. It's a concierge-level service designed to remove the single biggest point of stress in the entire insurance lifecycle. It's an incredibly high-touch, human-centric solution from a company most people associate with an app. And we can't talk about Progressive without talking about Flo. For over a decade, the character of Flo, the bubbly, energetic employee in the pristine white superstore, completely reshaped insurance advertising. Before Flo, insurance ads were either serious and scary, focusing on accidents, or they were about saving money with a cartoon lizard. Progressive and Flo did something different. They made buying insurance feel simple, approachable, almost fun. They demystified the product and turned their brand into a household name that felt friendly and familiar. That marketing created a level of trust and brand recognition that is almost impossible to put a price on. So, where does this leave Progressive in our rankings? Their strengths are monumental. They offer a nearly perfect fusion of cutting-edge technology and accessible human support. For the confident, safe driver, Snapshot offers one of the most direct paths to a lower premium in the entire industry. Their digital tools are best in class, and their service center claims experience can be a genuine lifesaver during a crisis. For the driver who wants it all, the slick app and the option of a local agent, Progressive is a powerhouse. But, and with every company there is a but, the model isn't flawless. That same Snapshot program that rewards good drivers can penalize bad ones. If you frequently drive late at night for work, or if your daily commute involves a lot of stop-and-go traffic that leads to heartbreaking, the all-seeing eye of the app might actually raise your rates at renewal. It's a transparent system, but that transparency cuts both ways. And while their concierge service centers are fantastic, their overall claim satisfaction scores from third parties like J.D. Power can be surprisingly average. They often land squarely in the middle of the pack, outshined by companies renowned for their customer service. This suggests a potential inconsistency. You might have a world-class experience, or you might find yourself in a bureaucratic loop. It's a bit of a gamble compared to the companies that sit at the very top of the satisfaction charts. Finally, their use of independent agents means that while you have a local contact, that agent also sells for other companies. Their ultimate loyalty might be to their own business, not exclusively to Progressive, which is a different dynamic than the dedicated, captive agents you find at other legacy insurers. Our final verdict places Progressive at number 4 on our list. They are an innovator, a true pioneer that has successfully built a bridge between the old world of insurance and the new. For the tech-savvy driver who is confident in their habits and values choice, the choice to be digital only or to meet an agent, the choice to prove their skill for a discount, Progressive offers a compelling, powerful, and highly flexible option that is tough to ignore. They have truly mastered the hybrid model. But what happens when a company abandons the idea of being a hybrid altogether? What happens when they decide to focus with obsessive singular clarity on just one thing and build an absolute empire on that one promise alone? We're about to look at a company that did exactly that, betting everything not on agents, not on fancy claims service, but on the simple, powerful, and deafening promise of a lower price. That company is Geico, and its story is one of the most brilliant, focused, and ruthlessly efficient business strategies in American history. It starts not in a bustling city center, but with a simple, almost boring name: the Government Employees Insurance Company. That name tells you everything. From day one, back in 1936, Leo Goodwin wasn't trying to sell insurance to everyone. He was targeting a very specific, low-risk group: federal government employees and top-ranking military officers. He reasoned that these were stable, reliable people who were less likely to get into accidents. A lower risk pool means fewer claims to pay out, and fewer claims mean you can charge a lower price. But the real genius wasn't just who they targeted, it was how. At a time when the entire insurance industry was built on a network of local agents, men in suits who you'd meet in person, Geico cut them out completely. They sold directly to the customer through the mail. Think about how radical that was. No agent commissions to pay. No expensive storefronts to maintain in every town. It was a lean, stripped-down model that slashed overhead costs to the bone. All those savings were passed directly to the customer in the form of a lower premium. For decades, Geico was a well-kept secret, a niche player serving its quiet, reliable customer base. They grew steadily, but they weren't a household name. Then, a man named Warren Buffett entered the picture and everything changed. Buffett, the most legendary investor of our time, saw Geico not just as an insurance company, but as a near-perfect economic engine. He was so captivated by its simple, brilliant model that he started buying its stock back in the 1950s. He saw what others didn't. A company with two massive advantages. First, a low-cost producer advantage, just like Walmart or Costco. By having the lowest operating costs in the industry, they could always win on price. Second, and this is the secret sauce, was the insurance float. This is a concept that made Buffett a billionaire many times over. Insurance companies collect all our premiums up front, but they don't pay out claims until later. That massive pile of cash they're holding onto in the meantime, that's the float. A normal insurance company might break even or even lose a little money on the policies themselves, but they make a fortune by investing the float. Geico, however, was so good at picking low-risk customers and keeping costs down that they were profitable on their underwriting, and they got the float to invest. It was like a machine that printed money from two different directions. By 1996, Buffett's company, Berkshire Hathaway, bought Geico outright, making it a cornerstone of their empire. And with the near-limitless financial firepower of Berkshire behind them, they unleashed a marketing blitz that would change advertising forever. They decided to take their secret weapon, their low price, and shout it from the rooftops. They needed a messenger. But who? An actor? A celebrity? No. They chose a gecko, a charming British-accented lizard who could deliver a simple, unforgettable message. 15 minutes could save you 15% or more on car insurance. It was absurd. It was memorable. And it worked beyond their wildest dreams. The gecko was just the beginning. They followed up with the Geico Caveman, so popular they got their own sitcom. Then came Maxwell the Pig, the Hump Day Camel, the rhetorical questions with "Did you know?" The strategy was relentless saturation. They spent billions of dollars a year, not just to sell a policy, but to burn the Geico name and its core promise of savings into the American consciousness. While other companies were advertising security and trust, Geico was advertising a number 15%. It was a direct, tangible benefit that everyone could understand. They turned buying car insurance from a dreaded chore into a quick, easy, and even slightly entertaining task. And just as their marketing hit its peak, the world changed in a way that played perfectly into their hands: the internet. Suddenly, Geico's direct-to-you model wasn't a niche strategy anymore. It was the future. People no longer wanted to call an agent and spend an hour in their office. They wanted to go online, get a quote in minutes, and buy a policy from their couch. Geico was already built for this. They had spent 60 years perfecting a system that didn't rely on face-to-face interaction. Their website and later, their mobile app became their storefront, open 24/7, with no commissions and incredibly low overhead. While the old guard, agent-based companies scrambled to adapt to the digital age, Geico was already there, waiting with a perfected system and a lizard telling everyone to come on over. So here we are today. Geico, backed by the financial fortress of Berkshire Hathaway, is an undisputed titan of the industry. But does the reality live up to the marketing? Let's break down their ranking. When it comes to price, the answer is a resounding usually. For a massive segment of the population, especially drivers with clean records, good credit, and standard vehicles, Geico is often one of, if not the cheapest options available. Their low-cost structure is not a myth. It's a mathematical reality that translates into real savings for millions of customers. The 15% claim isn't just a slogan. It's the foundation of their entire business. However, it's not a universal truth. For drivers with a spotty record, specialized vehicles, or unique coverage needs, Geico's rigid, algorithm-driven pricing can sometimes be higher than competitors who use human agents to assess risk more granularly. But here's the trade-off. That laser focus on price comes at a cost, and that cost is almost always in the area of customer service and claim satisfaction. This is where Geico's ranking begins to slide. According to J.D. Power's 2023 U.S. Auto Claim Satisfaction Study, Geico scores below the industry average. The story is similar in their overall customer satisfaction ratings. Why? Because the very thing that makes them cheap is what can make them frustrating. When you have a problem, you're not calling Dave, your local agent who knows your family. You're calling a massive, national call center. You're interacting with an app. The process is designed for efficiency, not empathy. For a simple claim like a cracked windshield, their app-based system can be fantastic, quick, easy, and painless. But for a complex, multi-car accident with injuries, many customers report feeling like just another number in a giant impersonal system. The lack of a dedicated, local human contact point is the fundamental compromise you make for that lower premium. Financially, they are an absolute rock. An A++. Being owned by Berkshire Hathaway means their ability to pay claims is as close to guaranteed as you can get in the financial world. There is zero concern about Geico's stability. So, who is Geico really for? Geico is the perfect choice for the self-sufficient, confident, and budget-conscious consumer. It's for the person who is comfortable managing their finances online, who sees insurance as a commodity, and whose primary goal is to secure reliable coverage for the lowest possible price. It's for the driver who understands and accepts that in exchange for saving hundreds of dollars a year, they are giving up the personalized, hand-holding service of a traditional agent. They are betting that they won't need that extra level of service, and they're willing to pocket the savings from that bet. It's a straightforward, no-frills transaction, and for millions of Americans, it's the smartest deal on the table. They built an empire on a simple promise of price delivered directly. But what if you could have it both ways? What if a company could offer rock-bottom direct prices, but also give you the option of a human agent? And what if they took the idea of personalized pricing to a whole new, and some would say invasive level by watching every move you make behind the wheel? That's the story of the company that named themselves after the very idea of moving forward. Progressive. Founded in 1937, it wasn't just a name, it was a mission statement. From the very beginning, Joseph Lewis and Jack Green were looking for an edge, a way to disrupt an industry that had been doing things the same way for decades. They were the innovators, the ones who introduced the idea of paying your premium in installments, a concept so common today we can't imagine a world without it. They were the ones who pioneered the first drive-in claims service, saving customers time and hassle. They were always looking for the next progressive idea. But for decades they were just another solid, if unremarkable, insurance company. A name you might have heard but probably couldn't place. That all changed with two things. The first was a woman in a white apron with a bright red lipstick smile. And the second was a little device that would change the insurance game forever. First, let's talk about Flow. In 2008, Progressive unleashed a marketing masterstroke. They turned the abstract, boring concept of insurance into a person. Flo wasn't a celebrity. She was a quirky, overly enthusiastic, and relentlessly helpful retail worker in a fictional, gleaming white insurance superstore. And America loved her. Suddenly, Progressive wasn't a faceless corporation. It was Flo. She was funny. She was memorable. She was everywhere. This brilliant campaign took Progressive from the background to the forefront of the American consciousness. It made them seem friendly, approachable, and most importantly, obsessed with saving you money. The branding was genius. It created a warm, fuzzy feeling around a company that, behind the scenes, was about to launch one of the most cold, calculated, and data-driven revolutions the industry had ever seen. While Flo was charming the nation on television, Progressive's engineers were perfecting their true weapon: Snapshot. The idea was deceptively simple, yet profoundly disruptive. For 100 years, insurance companies have been playing a guessing game. They use crude proxies for risk, your age, your zip code, your marital status, your credit score, to predict how likely you were to crash. It was a statistical bet. Progressive decided to stop betting. They wanted to stop guessing and start knowing. They asked their customers a tantalizing question. What if we didn't charge you based on people like you? What if we charged you based on you? All you have to do is let us watch. Snapshot was a small telematics device you plugged into your car's OBD2 port, the same one your mechanic uses for diagnostics. Later, it evolved into a smartphone app. But its function remained the same: to be a silent passenger on every single trip. It recorded when you drove, how far you drove, and most critically, how you drove. It tracked every hard brake, every rapid acceleration. It knew if you were a night owl cruising the streets at 2 a.m., or a commuter stuck in rush hour. The promise was a powerful one. Prove to us you're a safe driver, and we will reward you. We will give you the rate you actually deserve. It was the ultimate show don't tell. For millions of safe drivers, this was the deal they had been waiting for. They were tired of subsidizing the reckless drivers in their demographic pool. They knew they were good behind the wheel, and Snapshot was their chance to prove it and save hundreds of dollars a year. It was a massive success. Progressive's growth exploded. They were able to surgically identify and attract the lowest-risk drivers with unbeatable rates, leaving their competitors to fight over the rest. The data they collected was a goldmine, allowing them to refine their risk models to a degree of accuracy their rivals could only dream of. They weren't just insuring drivers anymore. They were curating a portfolio of them. But there was a dark side to this data-driven utopia. For every customer saving money, there was another who felt a creeping sense of unease. This little device, this app on your phone, it saw everything. It didn't know you slammed on the brakes because a deer jumped onto the road. It just registered a heartbreaking event. It didn't know you accelerated quickly to merge safely onto a busy highway. It just saw rapid acceleration. It penalized you for driving late at night, even if that was the only time you could get home from your second job. The context was gone, replaced by cold, unforgiving data points. The feeling of being constantly judged, of having a digital chaperone who could affect your finances, felt deeply invasive to many. It was Big Brother in your glove compartment. And then there was the fear. What if I'm not as good a driver as I think I am? Progressive's official stance was often that Snapshot could only help you or have no effect, not raise your rates. But the fine print and state-by-state regulations told a more complicated story. In some cases, and for new policies, poor driving data absolutely could lead to higher premiums. The program that was marketed as a pure discount became a potential liability. Millions of drivers, even safe ones, refused to even try it simply on principle. They didn't want their insurance company to have that kind of power, that kind of intimate knowledge of their daily lives. So where does this leave Progressive in our rankings? It creates a fascinating split personality. On one hand, you have a technological pioneer with some of the most competitive rates on the market, especially for those drivers who fit their ideal, low-risk profile and are willing to prove it with data. Their website and app are slick, modern, and easy to use. You can get a quote, buy a policy, and manage your account without ever having to speak to a human being. For the self-sufficient, tech-savvy consumer, it's incredibly efficient. But when things go wrong, when you actually need the insurance part of your car insurance, that efficiency can suddenly feel cold and impersonal. When you look at customer satisfaction surveys from J.D. Power, Progressive consistently ranks in the middle of the pack, or even in the bottom half. They are almost never near the top. Customers filing claims often report feeling like just another number in a massive, algorithm-driven system. The process is designed for speed and cost-effectiveness, not necessarily for empathy. While they have a vast network of adjusters and repair shops, the experience can feel transactional. You submit your claim online, you take photos with your phone, and you interact with the system. That friendly, helpful personality personified by Flow can feel miles away when you're standing on the side of the road, next to a wrecked car. This is the Progressive paradox. They are a company built for the modern age. A company that has mastered data, marketing, and digital convenience. They offer a product that is undeniably valuable to a huge segment of the population. Cheap, no-fuss insurance. If you are a great driver, live in a low-risk area, and are comfortable with telematics, Progressive might give you a price that no one else can touch. You will likely have a perfectly smooth experience, paying your bill every month and enjoying your savings. However, if you value personal service, if you want an agent who knows your name, or if you believe that in the aftermath of a traumatic accident, you deserve a human-centric, high-touch support system, Progressive's model might leave you wanting. They are not built to be your friend. They are built to be a hyper-efficient risk management machine. And that machine has propelled them to become the #2 insurer in the entire country, a juggernaut of the industry. They've proven that for millions of Americans, price and convenience are king. Progressive represents the cutting edge of insurance, a future driven by data and algorithms. But what about the old way? What about the company that built its empire on the exact opposite philosophy? Not on technology but on trust. Not on an app but on an agent in your local community. A company whose entire identity is built around the promise that when disaster strikes, a real person will be there, right down the street like a good neighbor. State Farm. For 100 years, that jingle has been more than just a marketing slogan. It's been a promise etched into the American psyche. It represents security, familiarity, and the idea that your insurance isn't some faceless entity in a skyscraper 1,000 miles away, but a person you might see at the grocery store. And in a world of chatbots and automated phone trees, that promise is more powerful than ever. This is the foundation upon which the number 3 auto insurer in the nation is built. State Farm is, without a doubt, a titan, a behemoth. For decades, they were the undisputed king of the hill, the largest auto insurer in the United States by a country mile. While Geico and Progressive have recently chipped away at their market share, make no mistake, State Farm is still a dominant force, insuring more cars and homes than almost anyone. Their power doesn't come from a quirky mascot or a barrage of 30-second TV spots. It comes from an army of over 19,000 agents, a force embedded in nearly every town and city across America. This agent network is State Farm's superpower. It's their moat. In an age of digital-first everything, State Farm doubles down on the human element. For millions of Americans, this is the only way to buy insurance. They don't want to click through a website. They want to sit down across a desk, look someone in the eye, and have their policy explained in plain English. They want a single point of contact, a name and a face to call when things go wrong. And for those customers, State Farm delivers an experience that purely digital companies simply cannot replicate. Your local agent can bundle your auto, home, and life insurance, becoming a one-stop shop for your financial security. This bundling often leads to significant discounts, a powerful incentive to bring all your business under that iconic red roof. Financially, State Farm is a fortress. It consistently earns top marks for financial stability from ratings agencies like AM Best. This isn't just boring financial jargon. It's the bedrock of their promise. It means that when a catastrophic event happens, a massive hurricane, a widespread wildfire, a devastating tornado outbreak, State Farm has the capital, the deep pockets to pay out billions in claims without breaking a sweat. It means the check won't bounce. When you're buying a promise to be made whole after a disaster, that financial strength is paramount. So, with the largest agent network in the country and the financial stability of a small nation, State Farm should be number 1, right? The perfect insurer? Well, this is where the picture gets complicated. Because for every customer who loves their local agent, there's another who feels like that agent is just a friendly face for a cold, calculating corporation. The promise of being there is tested not when you buy a policy but when you file a claim. And it's in the claims process where the cracks in the good neighbor facade begin to show. Let's look at the data. In the J.D. Power 2023 U.S. Auto Claims Satisfaction Study, State Farm scored right around the industry average. Not terrible but not great either. They didn't lead the pack. For a company whose entire brand is built on service and trust, average is a failing grade. Digging deeper, we find a pattern. While customers often rate their initial interactions with their local agent highly, the satisfaction levels can plummet once the claim is handed off to a corporate adjuster. Suddenly, that personal touch vanishes. You're no longer dealing with your neighbor. You're dealing with a massive bureaucracy, and the experience can be frustrating, slow, and impersonal. The National Association of Insurance Commissioners, or NAIC, tracks consumer complaints against insurance companies. They create a complaint index, where a score of 1.00 is the national average. A score below 1.00 is better than average. A score above is worse. For its private passenger auto insurance, State Farm's complaint index has often hovered right around that 1.00 mark, and in some years slightly above it. Again, not a catastrophic failure, but it reveals a disconnect. The marketing promises an exceptional neighborly experience, but the data shows a reality that is, for many, just average or even slightly below. The complaints often center on delays in communication, disagreements over the value of a totaled vehicle, and denials of claims that customers felt were perfectly valid. It's the classic David versus Goliath story. You, the individual, are up against a corporation with legions of lawyers and adjusters, all trained to minimize payouts. That friendly agent you bought the policy from? They often have very little power once the corporate claims department takes over. They can offer a sympathetic ear, but they can't force a check to be cut. This is the fundamental tension at the heart of State Farm. A decentralized, friendly sales force bolted onto a centralized, cost-conscious claims machine. So, who is State Farm for? It's for the person who values a personal relationship above all else. If you want an agent you can call by their first name, who knows your family, and who can handle all your insurance needs under one roof, then State Farm is an incredibly compelling choice. If you are willing to potentially pay a little more for that relationship and the peace of mind that comes with their financial strength, it can be a perfect fit. However, if your primary concerns are the lowest possible price and the most efficient, streamlined digital claims experience, You might find State Farm to be a bit old-fashioned and, at times, frustrating. You have to be comfortable with the fact that the good neighbor you sign up with might not be the one handling the nitty-gritty of your claim when you need them most. They are a reliable, stable, and massive company, but they are not always the top performer when it comes to customer satisfaction in the moments that truly matter. They are a giant, and sometimes giants can be slow to move and hard to reason with. This model, the agent-centric relationship-first approach, has defined American insurance for a century. But our number 2 company looked at this model and saw not a strength, but a weakness. They saw the offices, the agents, the overhead, and decided to build something entirely different. They stripped away the human middleman and replaced him with something they believed was faster, smarter, and more efficient: technology. They built an empire not on handshakes but on algorithms. A company that wagered that in the modern world, customers didn't want a neighbor. They wanted a supercomputer. Coming in at number 2 is the company that turned insurance from a relationship into a transaction, and in doing so, changed the entire game. Geico, the government employees' insurance company. Before the gecko, before the caveman, before the promise of saving 15% in 15 minutes became a cultural touchstone, Geico was a niche insurer with a radical idea. While companies like State Farm and Allstate were busy building empires on the back of the friendly neighborhood agent, a person you'd see at the grocery store, whose kids went to school with your kids, Geico took a look at the landscape and asked a fundamentally different question. What if the customer doesn't need a friend? What if they just need a better price? This was the shot heard round the insurance world. Geico's model was deceptively simple. They decided to sell directly to the consumer. No agents, no commissions, no expensive Main Street offices to maintain. Just a direct line, first through the mail, then over the phone, and eventually over the internet between the company and the customer. By cutting out the middleman, they could slash their overhead and pass those savings directly onto their policyholders. Their initial target audience was the key to making this work: federal government employees and high-ranking military officers. These were considered low-risk, stable, and reliable customers. By focusing on this select group, Geico could cherry-pick the best drivers and offer them rates the traditional insurers, who had to cover everyone, simply couldn't match. For decades, this was Geico's quiet, profitable little corner of the market. But then, one of the sharpest financial minds in history took notice. Warren Buffett. Buffett's company, Berkshire Hathaway, started investing in Geico in the 1970s, and by 1996, they bought the whole thing. Buffett didn't just see an insurance company. He saw a money-making machine unlike any other. He understood the power of what's called the float. That's the massive pool of cash that an insurer holds, all the premiums collected from customers, before it has to pay any of it out in claims. A well-run insurer can invest that float and make billions of dollars on the investments alone. Geico's direct-to-consumer, low-cost model generated an enormous and highly profitable float. With Buffett's capital and vision backing them, Geico was unleashed. They were no longer a niche player. They were gunning for the top spot, and their weapon of choice was marketing. In the late 90s and early 2000s, Geico carpet-bombed the airwaves. They understood something profound about a product that is, for all intents and purposes, invisible and boring. To sell an intangible promise like insurance, you don't sell the policy, you sell the brand. You sell a feeling. And the feeling Geico chose was a combination of humor and savings. Enter the gecko, a charming British-accented lizard who became one of the most recognizable brand mascots in American history. He was followed by the perpetually offended caveman, the "So Easy a Caveman Can Do It" campaign that was so popular it even got its own sitcom. There was Maxwell the pig, the rhetorical questions, the whole absurd and hilarious universe they created. The strategy was brilliant. While other insurers were running serious, somber ads about being there for you on your worst day, Geico made you laugh. They embedded themselves into pop culture. And every single commercial, no matter how ridiculous, hammered home one simple, unforgettable message: 15 minutes could save you 15% or more on car insurance. It was a direct call to action. A challenge. It made you wonder, am I overpaying? Maybe I should just check. They weren't asking for a lifelong commitment, they were just asking for 15 minutes. And millions upon millions of people took them up on that offer. As the world moved online, Geico was already waiting. Their entire business was built for a digital world. They didn't have to retrain a massive agent workforce or overhaul a business model built on handshakes. They just had to build a website and an app that did what they'd always done: give people a quote quickly and efficiently. For a generation raised on the internet, who preferred a seamless app to a phone call, Geico's model wasn't just an alternative. It was the obvious choice. This is why they sit at number 2. Their strengths are formidable. First and foremost, price. For many drivers, especially those with clean records, Geico consistently offers some of the lowest premiums available. Their entire structure is designed to be a lean, cost-cutting machine. Second is convenience. You can get a quote, buy a policy, pay your bill, and even start a claim at 3 in the morning from your phone without ever having to speak to a human being. It is a model built for the modern self-service consumer. But that very strength is also their greatest weakness, and it's what keeps them out of the number 1 spot. The relentless focus on efficiency and cost-cutting comes at a price of its own: customer service. When everything goes smoothly, the Geico experience is fantastic. But when you have a complex claim, a billing dispute, or a situation that requires nuance and human understanding, the system can feel cold and unforgiving. You're no longer a person, you're a policy number in a queue. Many customers complain about being bounced between different departments, speaking to call center representatives who lack the authority to solve their problem, and feeling like a cog in a massive, impersonal machine. While their digital tools are top-notch, the human element can be severely lacking. J.D. Power surveys often reflect this dichotomy. Geico scores well for its website and app, but often falls to the middle of the pack or lower for claims satisfaction and overall customer service. The claims process, the single most important moment of truth for any insurer, can be a mixed bag. For a simple fender bender, their app-based claims filing can be incredibly fast. But for a more serious accident involving injuries or liability disputes, the lack of a dedicated local agent to guide you, to advocate for you, can be a massive disadvantage. You're left to navigate the complex, often adversarial process on your own. So who is Geico for? It's for the confident, tech-savvy, and price-driven consumer. It's for the person who is comfortable managing their own policy online, who prioritizes a low monthly premium over a personal relationship, and who is willing to trade the potential for white glove service for undeniable savings and efficiency. Geico isn't selling a relationship. They are selling a transaction, a highly efficient, low-cost transaction. And for millions of Americans, that is exactly what they want. They created the modern playbook for direct-to-consumer insurance, a model that Progressive would later supercharge with data and algorithms. We've seen the data-driven supercomputer in Progressive. We've just seen the original disruptor in Geico. Both have fundamentally reshaped the industry by removing the human agent from the center of the equation and betting everything on technology and price. So who could possibly be number 1? Who could have the scale to compete with these two behemoths, yet somehow avoid the pitfalls of their impersonal, transactional models? The company in the number 1 spot didn't just build a business, it built an institution. It's a company whose brand is so powerful, it's become a synonym for insurance itself. A company that figured out the billion-dollar secret to combining massive scale with a reputation for being there when it matters most. Coming in at number 1 is the undisputed king, State Farm. It's almost impossible to overstate their dominance. For decades, State Farm has held the title of the largest auto insurer in the United States, and it's not even close. They command a staggering market share, insuring more cars and trucks than anyone else by a wide margin. But their number 1 spot isn't just about size. It's about a fundamental business model that has proven to be one of the most resilient and powerful forces in American business. To understand State Farm, you have to go back to 1922. The founder wasn't a Wall Street tycoon or a tech visionary. He was a retired farmer from Illinois named George Jacob Metchelly. G.J. Metchelly saw a simple injustice. He realized that farmers who drove less often and on less congested rural roads were paying the exact same high insurance rates as city drivers who posed a much higher risk. He believed this was fundamentally unfair. So, he started his own company with a radical idea. He created a mutual insurance company, one that was owned by its policyholders, not by outside stockholders. And he would offer lower rates to farmers and residents of small towns. The name itself was a promise: State Farm Mutual Automobile Insurance Company. It was insurance for farmers from a company that understood their state. But Metchelly's true stroke of genius, the secret sauce that would propel State Farm to the top and keep it there for a century, was the agent model. While competitors would later centralize into massive, anonymous call centers or faceless websites, State Farm went in the opposite direction. They built their empire on a foundation of thousands of local, independent contractor agents. This is the key. The State Farm agent wasn't just a salesperson in a cubicle. They were a pillar of the community. They were your neighbor. The person you'd see at the grocery store, whose kids played on the same little league team as yours. They were a real physical presence in your town, operating under the banner of one of the nation's most powerful brands. This created a level of trust and loyalty that is almost impossible for a website or a 1-800 number to replicate. When you had an accident, you weren't dialing into a random call center and explaining your situation for the 5th time. You were calling Dale or Sarah or Mike, the person whose office you drove by every day, the person who knew your family and your situation. This human element, in an industry often perceived as cold and transactional, became State Farm's billion-dollar moat. Their iconic slogan, "Like a good neighbor, State Farm is there," is arguably the most effective piece of marketing in insurance history because it's not just a slogan. It's a direct description of their business strategy. They put a good neighbor in nearly every town in America. So what does this mean for you, the customer? First, the claims process. State Farm consistently earns high marks from J.D. Power for overall customer and claims satisfaction. When disaster strikes, having a local agent to guide you through the process, to advocate for you, and to answer your questions face-to-face is an incredible advantage. They act as a liaison between you and the massive corporation, simplifying a process that can be overwhelming and stressful. This is the moment of truth for any insurance company, and State Farm's model is built to excel here. Second, financial strength. Being number one gives you unparalleled stability. State Farm holds the highest possible rating from AM Best, an A++. This isn't just a grade on a report card. It's a guarantee. It means that no matter how catastrophic an event, no matter how many claims come in at once, State Farm has the financial fortress to pay them all without breaking a sweat. When you pay your premium, you are buying a promise, and State Farm's financial rating is proof that their promise is rock solid. Third, it's a one-stop shop. Because of their agent model, they are perfectly positioned to handle all of your insurance needs. Auto, home, renters, life, even banking and investments. This bundling creates incredible customer stickiness. The discounts are significant, but more importantly, once you have a trusted relationship with an agent who handles your entire financial protection portfolio, the thought of leaving for a slightly cheaper auto rate from an online competitor becomes much less appealing. Now, we have to be honest about the trade-offs. This level of personal service and brand trust comes at a cost. State Farm is often not the cheapest option. If your primary and only concern is finding the absolute rock-bottom price, you will likely find better deals elsewhere. You are paying a premium for the agent, for the peace of mind, and for the brand's reputation. Furthermore, while they have made huge strides in recent years, their digital experience, the app and the website, has historically lagged behind tech-focused rivals like Progressive and Geico. They are a relationship-first company, not a technology-first company, and that can sometimes show in the user interface. But at the end of the day, millions of Americans have decided that the premium is worth it. They have voted with their wallets, making State Farm the undisputed king. They represent the pinnacle of the traditional insurance model, a perfect fusion of massive corporate scale and hyper-local, personal service. They proved that in an age of automation and algorithms, the human touch is still the ultimate killer app. So there you have it. Our journey through the titans of the U.S. auto insurance industry is complete. From the disruptive technology of Progressive and the marketing machine of Geico, to the unwavering loyalty of USAA, and the neighborhood trust of State Farm. What we've learned is that there is no single best insurance company. The real question is, what is the best insurance company for you? Are you a self-sufficient, tech-savvy shopper who wants the best digital tools and is willing to manage everything yourself? Progressive might be your perfect match. Are you relentlessly focused on getting the lowest possible price, and you're comfortable with a purely digital, no-frills experience? Geico is waiting for your click. Are you part of a military family, valuing unparalleled customer service and a sense of shared community above all else? USAA is in a class of its own. Or do you value a personal relationship, a trusted local advisor who can guide you through all of life's moments? And are you willing to pay a bit more for that peace of mind? Then a State Farm agent is likely waiting in your hometown. Your final task is simple. Before you get a single quote, decide what you value most. Is it price, service, technology, or a personal relationship? Define your priority. Then use that priority to guide your search. Get quotes from the companies that align with your values. Read the fine print, understand the coverage, and look at their financial strength ratings. Because choosing an insurance company isn't like choosing a brand of soda. It's a critical decision about who you will trust to be there when your world is turned upside down. The cheapest policy is worthless if it fails you in your moment of need. The best insurance isn't just a piece of paper. It's the confidence to get behind the wheel every day, knowing that no matter what happens, you've made a wise choice to protect yourself and your family. Drive safe and choose wisely.